groups. I've met with several groups of industry leaders in community areas. We have worked with them, and we've had several meetings of large groups that have come in.
Could you spell out for this committee, I assume you can't recite numbers now, but would you get back to this committee within the week that the chairman usually calls on to delineate whom you have met with, which banks? I mean, you'd give us a litany of, diversity of meetings is not small banks, medium banks, large banks. There are customers, there are community groups, there are all that. So if you would spell out specifically whom you've met with and give that to this committee, whom you've met with, and about the executive order, if you would be willing to do that.
We would be more than happy to do that on a confidential basis.
I accept that and would honor that. Last question, Mr. Secretary. You committed to Senator Hatch in the Finance Committee that you would respond to all the Finance Committee members' questions. I wrote to you 2.5 months ago on March 2nd. I haven't received an answer that I asked for about potential conflicts of interest and ownership in the administration. Just today, there's a front page story in the, shall we say, mainstream media. It's the Wall Street Journal. That about the president's business partners and his financial entanglements with a Russian bank that is on the sanctions list. So I would like to pose the question again that I asked in finance in follow-up that I wrote to you on March 2nd. Will you get a complete list of Trump business associates and financial ties to ensure that any foreign entanglements are benign with respect to the laws you enforce, terrorism, money laundering, sanctions, CFIUS, IRGC associations, and the like? So would you commit to us to get a complete list of Trump business associates and financial ties because of the threat they could have, to ensure that they are in fact benign?
Well, let me first say I did review before I came today to make sure that my staff had fully responded to all the inquiries from you in the committee, and I believe we have. And if there are outstanding questions that you've had from letters that you've sent us, please make sure you follow up with me after this, and we will make sure that we are responsive. In regards to your specific question, again, if you just send me a note on what you're looking for, we will review internally whether it's appropriate to come from us or somewhere else, and we're happy to be responsive to you.
Yeah, I appreciate that, and thank you for your cooperation. But the letter was March 2nd. It was not answered. I'm asking it again. I will follow up with a letter again, but we want to know, we want a complete list. I mean, there are people in this country are troubled by the president's business connections. They're troubled when the president's family goes to another country to do business, and American taxpayers provide security for their families, and that money goes to the Trump business empire, including the president. People want to know about those financial entanglements. That's not an academic or a political science exercise. It's not even a political exercise. It's about the national security of this country, and it's about people needing to know that information. So I reiterate how important it is. We just last week listened to the nominee for CFIUS and terrorism and financial crimes, all those very important issues, or those positions, and we want to make sure his ties don't affect their ability. The Undersecretary for Treasury for Terrorism and Financial Crimes, the ability of the CFIUS nominee to do their jobs.
Well, I can assure you I take the CFIUS responsibility very seriously. I review the cases weekly. My team reports to me on it, and I can assure you that if there were any cases that involved the president or any members of his family, that they would be treated very seriously, and we would review them like anything else.
But the public needs to know that as you review them. Thank you, Mr. Chairman.
Senator Corker.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being here. I appreciated our conversation yesterday evening, and I know that you heard Chairman Crapo's commitment to housing reform in his opening comments. I know that you've got some tax reform issues and others to deal with, but it's my sense that you're strongly committed to finally dealing with housing finance reform in an appropriate way. Is that correct?
That is correct, and I hope that's something that we can do on a bipartisan basis.
And if I think the only way to do it appropriately, where you deal with some of the charter issues that are necessary to really go beyond the model that we had back in 2008. The only real way to do that is through congressional action. Is that correct?
My strong preference is to do it through congressional action and working with you and your colleagues. I will say that obviously the Treasury has a lot of exposure and taxpayers are at risk, but my strong preference is to do it exactly as you've described.
Mm-hmm. I talked to you a little bit about I guess a couple nights ago, Mr. White called me to talk a little bit about a conversation we had here publicly about the capital cushion and some other issues. And, you know, I sincerely believe that he feels strongly about the position that he has laid out. I discussed that with you a little bit last night, and I know your position there, but it seems like we've got another 75 days or so to figure out the appropriate resolve to that. Is that correct?
That is, and I appreciated you calling me and talking about that issue. I've had the opportunity to meet with Mel Watts several times. Last time we talked about the dividend extensively, and I did tell him that it was our expectation at Treasury that they would pay us the dividend, and we hope they continue to do so per the agreement.
I think most of the models that have been put forth to try to resolve the issues that have continued to exist with Fannie and Freddie, most of them call for an explicit guarantee because of the fact that there was an implied guarantee, which really caused a situation where there were private gains and public losses. Certainly, if there is any guarantee that's put in place after hopefully a large amount of capital being put up in front, that's something that should be priced, should it not?
Absolutely. If we do end up with a situation where the government is issuing a guarantee, no different than FDIC insurance or FHA insurance, the government and the taxpayers should be compensated for that risk.
Well, I'd just like to say, again, there's been a lot of work. Senator Warner and myself, many of the people here at the committee have spent a great deal of time on this issue. As I mentioned to you last night, I doubt we'll have a that knows as much about this topic as you, and I look at this as a tremendous opportunity really to resolve this issue because of your knowledge and the strong interest on our committee. I think when we attempted this back in 2013, we did so in a fashion that was so complicated, very difficult, even though we passed something out of the committee, to bring that into the mainstream on the floor and certainly in front of the American people. My sense is there's been a lot of work to streamline since, and I will say I feel for the first time a real opportunity to align not just the interest of U.S. taxpayers and the fact that we want to have a housing finance system that is robust, but also, in fairness, one that more fully aligns the public sector interest and the private sector interest. I know I talked to you a little bit about some potential proposals last night on the phone, but I just want to thank you for your interest in this and look forward to hopefully completing the work that is the last piece of work, the one piece of work that really should have been front and center on financial reform when we did it in 2010. And I want to thank you for your concern, your interest, and hopefully involvement in bringing this to a close.
Thank you. I'm committed to work with you on it.
Thank you, Senator Reid.
Thank you, Mr. Chairman, and thank you, Mr. Secretary, for joining us today. You noted in your testimony the importance of the work done at the Treasury Department to identify and disrupt terrorist activities, specifically by targeting their financial networks. And this work is critical and depends a great deal on cooperation of our allies around the world, specifically where intelligence sharing is concerned. And after the recent revelation that President Trump shared highly classified information with the Russian foreign minister, reportedly information given to him by an ally but shared without its knowledge, do you have concerns about the chilling effect this is likely to have on our relationships with these critical intelligence sharing partners?
Well, I can't comment on what information was shared or not, since the only thing I know is what I read in the press. But I will say I'm probably spending 50% of my time on TFI issues. It is, I think, perhaps the most important issue right now as part of my job. I assure you that I take it very seriously. I've had 2 foreign trips meeting with both the G7 and G20, and in each one of those meetings with my counterparts, I have discussed this, and I'm happy to report that we have a very close working relationship with our partners and our allies on this issue, and something I think can be incredibly effective in stopping terrorism throughout the world.
Thank you. The White House has also asked you to review the orderly liquidation authority established by the Dodd-Frank Act. And as you know, the statutory purpose of the OLA is to provide the necessary authority to liquidate failing financial companies that pose a significant risk to the financial stability of the United States in a manner that mitigates such risk and minimizes moral hazard. And I'd like to highlight some of the OLA provisions and ask whether you support them. In the case of a failure of a mega bank, do you support the mandatory removal of the mega bank's executives and board members responsible for the failure?
Again, we are going through an extensive review of OLA as instructed by the President. We are just starting that process. I have had discussions with many finance ministers and governors throughout Europe, and this is something that's obviously very important to them as well. It would be premature for me to make any specific comments on any aspects of it. We're doing a review. I'm open-minded to looking at all these, and I look forward to issuing a report, and we'd be more than happy to come back and update you once we've done more work on it.
Let me, recognizing your answer, put on the record two other issues which I would like you to bear particular attention. And I'll put it in the form of a question, understanding that your response would probably be similar to your initial response. Do you support the FDIC's authority to claw back compensation from executives or directors substantially responsible for the failure?
I would say as a general matter, I think that is a good policy that has been instituted. So, again, it is something we will review, yes, but yes, I generally support that.
Would you support the statutory mandate that taxpayers shall bear no losses from the exercise of any authority under OLA?
Again, I would say that's an objective, but again, I would reserve comments, specific comments, until we complete the review. Obviously, we do not want to put taxpayers at risk in any way, and that's one of the reasons we're looking at all the core principles.
Mr. Secretary, the tax plan is rather terse in details, but it suggests that some of the highest income Americans would receive significant tax cuts, and the majority of tax relief to the remaining Americans would be rather minuscule or certainly small. And there's a possibility that in the proposal there could be indeed some increases on individual families or individual taxpayers. Are you committed now to ensuring that there'll be no increase on families or individual taxpayers less than $250,000 a year? And I'm picking that as kind of a reference point, but are you committed to something like that?
Let me just say that obviously tax reform is something that we are working on with the House and the Senate, but I can assure you that the President's objective and my objective is that we create a middle-income tax cut and that we do not raise taxes on the middle income. If anything, the opposite. We are trying to create a middle-income tax cut.
Would that tax cut be equivalent to the tax cut enjoyed by the very richest Americans? People who make about highest 1%?
Again, obviously, we are working on the details. One of the things we've done is we have proposed getting rid of almost every single deduction, which is something that is used by the rich in return for a slight reduction in taxes. And our objective is that 95% of Americans won't need to use itemized deductions and will be able to fill out simplified tax returns. And we look forward to working with you as we progress on the details.
Thank you, Mr. Secretary.
Senator Toomey.
Thank you, Mr. Chairman, and Mr. Secretary, thanks for joining us. Right over here.
Yes.
Good to see you again. I do want to take a moment to compliment you on the extraordinary accessibility. You have been before groups of us, members of the Finance Committee. I've lost track of the number of times you've been on the Hill to get input on the various issues in your brief. You've been available by phone. You've hosted meetings at the White House, and that is a very welcome change from the previous regime, and I'm grateful for your accessibility and responsiveness. I also want to commend you for reiterating the goal that we should be striving to create an environment in which we can sustain growth that's above 3%. I think that's entirely achievable, and it's a very important goal, so thanks for mentioning that. As a quick follow-up to the comments from the senator from Rhode Island, I would just like to underscore that as you do this review of the OLA and the OLF, I hope we will keep in mind that this very convoluted construct, which at the end of the day contemplates a taxpayer-funded bailout through the OLF of a failed bank, it is a creature of the fact that we don't have an adequate resolution mechanism in bankruptcy. And some of us have been working for some time on legislation that would give us the confidence that we could resolve even a very large, complex firm in bankruptcy so that we wouldn't need to put taxpayer funds at risk indirectly through the OLF, nor all of these very prescriptive punishment mechanisms that the FDIC would subjectively decide to impose, of which the senator from Rhode Island mentioned a few. In this general topic, I wanted to address one of the egregious problems with the FSOC, which you chair now, and it has to do with the designation of these too big to fail firms. The SIFI designation strikes me there are several obvious problems with the way that had been run, and I'm hoping to get your reassurance that it's going to be run differently. Some of the things I've objected to is a completely opaque process where a prospective designee would have no idea the criteria by which they would be designated. A second is a complete lack of a defined so-called stringent regulation, which is the Dodd-Frank prescripted punishment for being designated. No clear off-ramp, no mechanism by which you could, once designated, change your business practices so that you could be relieved of the designation. And even firms like asset managers had to worry about being designated, and asset managers, as you know, do not intermediate credit risk. They don't fund themselves with deposits. They do not have the kind of risk profile that banks have. So my question for you is, can you assure us that under your leadership, the FSOC is not going to launch a whole new wave of designations and is not going to be run in this very opaque fashion? And could you share with us how you do intend to lead the FSOC, since it does exist in statute?
Sure. Well, again, I take my responsibility of chair of FSOC very seriously, not only on the designation issue, but it's also a very important forum where we can talk about issues across the regulators. Cybersecurity is something that I'm very focused on, and we are working at FSOC in other areas with the regulators. Specifically on your question, the President has signed an executive order where we are reviewing the FSOC designation process. Again, it's early in that work, but I will tell you I do support the concept of transparency, and I do believe that if a company is being designated, that they should understand what would be required to be de-designated if they want to de-risk their business. So, yes, generally in regulation, I believe that there should be transparency.
Thanks. And then just quickly on the CFPB, I remain deeply concerned that the way this entity was structured has left it completely unaccountable, and it behaves as an unaccountable regulator. In many ways, the House Financial Services Committee had to take extraordinary steps to even discover the nature of their processes in their regulation of indirect auto lending, despite the fact that the statute forbids them to regulate auto lending. They continue to fail to produce a timeline that we've requested to explain their involvement in the discovery of the Wells Fargo abuses, where it appears that the CFPB jumped in at the end to take credit for what others had done. And Director Cordray has still yet to respond to QFRs that I submitted to him over a year ago. I think this lack of responsiveness and accountability is the logical consequence of an entity that even a court has determined is unconstitutional in its construct. I hope you'd agree to work with us to change the governance of this entity, make it subject to appropriations and appropriate congressional oversight.
Yes, we would work with you on that.
Thank you. Thank you, Mr. Chairman.
Thank you. Senator Menendez.
Thank you, Mr. Chair. Mr. Secretary, welcome.
Thank you.
The President spent a great deal of time on the campaign trail highlighting those neighborhoods and communities throughout the country that seldom reap the benefits of economic expansion but are reliably and disproportionately burdened by economic downturns. And in responses to my questions for the record after your confirmation hearing, you said, quote, "I share your commitment to bring back jobs to these communities that have been so gravely affected by economic conditions for which they had no part in creating. If confirmed, I will work with you to make sure the poorest and rural Americas of America are no longer left behind," which was heartening to hear. So with that, let me ask you about community development financial institutions. The private community partners that have stepped up for the better part of a century to inject capital, create jobs, provide mortgage credit, small business loans, banking services in those forgotten communities. In 2016 alone, CDFIs made over 39,000 loans and investments, totaling more than $3.6 billion, financed over 11,000 small businesses and over 33,000 affordable housing units. So explain to me, how is it possible to reconcile the President's promises and your commitments with the administration's plan to eliminate the Community Development Financial Institution Fund, the very foundation on which these investments are made possible?
Sure. Well, let me first again say I am committed to work with you on helping these communities. In traveling with the President during the campaign, I had the opportunity to see a lot of this, and I also had the opportunity at One West to see this where previous loans have been made improperly by IndyMac. In regards to your question on CDFIs, as you know, the President's budget has as a priority to make sure that we reinstitute proper spending for the military. The President is very concerned that we have not made those proper investments over the last number of years, and that required a huge investment on part of the government. So we had to make difficult decisions in where we would try to save money on other areas. While I share some of your concerns with the CDFIs, we had to look at this across a lot of different priorities. It is an area where this market is mature and there is private capital that will come in and the banks do lend, but I do share your concerns on this.
Let me respond to that because I believe in a strong defense. We spend more than the next 7 countries combined, and we can do better, but not at the cost of everything that makes America worthy of fighting for and dying for, and not at the cost of millions of Americans who languish in an economic situation for which none of us generally would want to live in. And when I looked at the budget justification that was put out by the administration, the justifications proposed in the budget outline as to why it should be zeroed out is not even an accurate description of the program's statutory purpose. It said that this was to, quote, jumpstart an industry. That wasn't the case. It was created to promote access to capital and promote economic growth in economically distressed areas. So we obviously disagree on the value of the program because in my mind, when there are more than 50 million Americans living in community with high percentages of adults who aren't working and many who have no high school degree, every block has a few vacant homes and incomes are stagnant, these communities desperately need investments that will allow them to start small businesses, create jobs, purchase homes. This is where I thought I was going to find common ground with the administration, but zeroing out, for example, CDFIs, even in your desire to do national defense, doesn't make any sense on behalf of the very people who you supposedly want to defend. We want to defend, but we also want to create economic opportunities. So even the banking industry, the ABA and the ICBA, said it best in their letter to Congress requesting full funding. They said CDFI work in the exact communities that were the focus of this conversation. They are uniquely positioned to understand local credit needs. So as we go into the 2018 fiscal cycle, I hope that you can be an advocate within the administration for something and your own stated goal. And, you know, I hope to be able to work with you to make that happen. Lastly, I wrote a letter in March to you concerning about the real possibility the administration would be forced to deal with an offer from Russia's state-owned oil company to acquire critical energy infrastructure in the United States. Last year, Venezuela's large state-owned oil company, PDVSA, pledged nearly 50% of Citgo shares to Rosneft as a collateral for its loan. I received your response on Friday evening, and frankly, it doesn't say anything. It just recites relevant statutes and standard CFIUS procedures. So my question is, would it concern you, Mr. Secretary, if Venezuela's state-owned oil company defaults on the debt, and as a result, Russia's state-owned oil company exercised a near majority ownership stake if they haven't purchased additional shares in the open market? They may have the possibility of being the majority owner. With 48 U.S. petroleum product terminals, 3 refineries in 3 different states, 9 pipelines throughout the country, wouldn't that be something that would concern you?
Well, let me just be very clear in stating this. This is an issue that I am aware of, not just from your letter, but from other people who have raised the concern. I can assure you that this, like any other national security issue, will be reviewed at CFIUS. And at appropriate where national security issues also discussed in other confidential settings. And at the appropriate time, I'd be more than happy, as issues progress on a classified basis, we'd be more than happy to have a confidential discussion with you.
I look forward to that. Thank you, Mr. Chairman.
Thank you. Senator Scott.
Thank you, Mr. Chairman. I think it's good to see Mr. Tillis here with us today. Everyone's giving him thumbs up, so it's good to see you healthy here. That's why I don't run at 8 a.m. in the morning, however. Shut up. Excuse me. We'll talk to you later. Mr. Secretary, it's good to see you here as well. Like you, I had a past professional life. I spent about 20 years in the insurance industry. Now, that may not be as cool as making the Lego Batman movie, but it is germane to my question. I was pleased to see the President call for you to review the FSOC's non-bank SIFI designation authority. I think examining the transparency, the due process, and likelihood of distress associated with these designations is good public policy. At the end of the day, insurance companies are not banks, and they should not be treated as such. Under existing law, FSOC includes an independent member with insurance expertise. Most FSOC members can have their vacancies on the council filled by whoever takes their place. The law specifically allows that. Unfortunately, such a provision does not exist for the independent member with insurance expertise. When the current insurance expert's 6-year term ends, there will be no one there to take his place and no voting member with any insurance expertise. Do you believe that Congress should address this discrepancy between the vacancies of the FSOC members, and if so, how would you suggest that we do so?
I would, first of all, let me just say I've had the opportunity to meet with him several times. I do think it's very important that we have someone on FSOC that represents and has experience in the industry, knowledge. I'd be happy to work with you on that issue. We're aware of his term is coming up, and if you or anybody else have suggestions for us for someone to replace him, we'd be happy to listen to that. But I share your concern, and we want to make sure that we keep that spot on FSOC.
I assume that when you make your presentation to the President on your review that you would perhaps bring that issue up to the President as well?
Yes.
I want to thank Chairman Crapo and Ranking Member Brown, who have both committed to solving this issue as well. So I think if we work as a committee, we can solve this, I think, discrepancy that is unusual and certainly not practical. Thank you.